Hey, it's Mack with PriceActionTradingSystem.com, and it is Thursday. It's January the 10th. This will be our chart lesson today. Another good trend today. What looked like was going to be a huge down day turned into be a fairly nice up day. And I did make some notes here. We talked about this a little bit yesterday about how the previous day's highs and lows and things like that often come into play. Well, this area right across here with this blue little lighter blue line, that was yesterday's lows. And you see it acted as resistance until prices finally worked through there, and we're actually coming back. If we extend this line on out, you can see we're coming back and trying to actually test it again. So I don't know why that little line's so hard to get straight. There we go. Maybe that's straight. But anyway, prices are coming back and testing it again. Will they hold or get through there? We'll have to see, but you'll need some kind of little trap or something here to the short side before you'd probably consider going long. And otherwise, the trend is still working down. I don't have any trend line, any kind of trend line on here. We did get a close outside with a couple of legs down, so it wouldn't surprise me if we don't bounce here. We'll just have to kind of watch that and see what happens. But for now, it's still definitely downhill. Again, I wouldn't want to go long there without some kind of trap or double test of it. You can see it didn't really hold. We kind of got below it again. So we'll just have to see what happens. But let's talk about the trades. I did want to point that out. This was actually yesterday's lows. And then notice where we got the next resistance at yesterday's open. And notice how it acted on both sides of that. And guess what? This not only was this yesterday's open, I think this is 1960 and a quarter. And if you go back and look at yesterday's video, remember me talking about that area was what I called the the difference between the support and resistance. I think that's where I showed that right across there. It was 60, 60 and a quarter, but that looks like it right there. Maybe 60, 50. Actually, it's 60, 50, but it could be off a tick or two. But that was the area that I talked about that was important yesterday, that everything above that was acting as support and everything below that was acting as resistance. And so that was kind of the important area yesterday in that little range. And then guess what? It comes back today, and you know, and that was yesterday's open too. Let me show you that. If you look, there's yesterday's open. I end up calling it, I think, a tad or so higher, or maybe it was a couple of ticks lower than the open. Maybe that's no. I think I was trying to show. I'd have to go back and watch the video, but a lot of this came later in the afternoon, but I was trying to show you where most of the support was coming in, and I think it was right across there, which was the opening of yesterday. Notice there's the open, so that was the opening point. But regardless, that turned out to be the, pretty much the thin spot, or the support resistance break that we talked about in the video yesterday. So you'd have to go back to see exactly what, but it's within a tick or two, a few ticks of that area. So I just wanted to point that out to show you how important that is. So I put it on the chart today because it does come into play, and you can see that's to the tick. We found resistance at that same spot yesterday before backing up and then getting a little momentum and shooting off through there again. And then notice how it's holding us support, or trying to, until it fails and then turns down. And it's still, kind of hanging around that same area. We're back, even after this huge sell-off, we're back to the same place we ended up yesterday. And we closed a little bit higher up here around 68 or so. But, we're back to that same area that we were going back and forth on yesterday. So just make a note of that. It's, it is important. I'll leave that on there. Hopefully it won't be in the way. Let's just make the chart a little bigger. I did also want to say I got quite a few comments about my little soapbox episode yesterday, and I'm glad. I appreciate you sharing that with me, because I don't know why I felt so compelled to share that with you, but at the same time I didn't. Something kept telling me to share that with you, But then after I listened to it, I thought, some people probably think I'm crazy or whatever. But the feedback I got tells me that my gut instinct to share that with you was the right thing, because many of you commented about it, and how it how it was positive for you and how you learned something from it. So um, I'm glad I did it after all, and we'll leave it at that. So, but let's talk about the trades I saw when I came in. Prices were kind of hung in this little trading range here, and everything had been downhill, and was a downhill that strong, you're probably going to retest the lows again. And so just wait on the setup, and notice you try to go up once, pull back, first entry, pull back, and then you get that second entry long, you get that double test rule. Here's your high. We tested it 2 more times. It failed. That's a nice trap. Just go short below this bar right here and look at it go. And I was only, looking for it to go here, but it just keeps on moving down. And then you get a first entry short, it pulls back, and it gives you a second entry short here, but notice how close that is. And now we've already had the break. We actually had the break and the 2 legs down right here, so that's the reason I didn't like taking that second entry short. Actually, the second entry short came right here, and that's not a very good setup with all those dojis, and that's not a bearish bar. So when this one came, I'm just sitting on it, and you don't want to go long there yet either, though. It's kind of like what I talked about yesterday. This is one of these where you just have to understand what prices are doing and just kind of wait until you get that trap. And you're not looking for a trap to the short side necessarily. You're just really kind of sitting tight. But when you get that double rule test right there across that area and it turns down, I think you want to take that short right there. And that was a really good setup. And then I don't think you want to go short here, and then you get the short trap. And notice what I'm doing here. Notice where the traps are coming to play at, where you're looking for them. You're not just looking for these traps anywhere. Notice that these are at a high on a correction when we're looking for shorts. And even though we may still be looking for shorts right here, we are looking for a reversal, but we're not looking for shorts near the lows. We're looking for them on corrections, and this is not, it'd be better to take a short right here than it would be to take this second entry way down here, right near where we're finding. And you see that little gap right there. I talk about that a lot, and you can see that. That's usually where you find your support and resistance area, and that's where really the line, and that's where it bounced finally right there. So those gaps, other people tell me they see the gaps and they see more of them maybe, and they're not in the same place. But usually when I see these things, they're at critical important areas, and they tend to be, there's a reason for why prices gap over there. And a lot of times it's just either the buying overcame everything else right there, or there wasn't much selling left, and so it just skips right over it. But notice how it closes above it. It closes above it on all those bars, and then touches it to the tick and turns up there. It's telling you something. So it's telling you that there's a reason there's a little gap there. Doesn't, I don't know, and don't ask me exactly what it's telling you, but it's just showing you that that's an important price level. And a lot of buying is coming in right there, because look what happens every time prices came down there, the buying picks up. So it just tells you it's an important place where a lot of people are perceiving value in the market and coming in to buy it. Doesn't mean that prices won't keep working on it and eventually get through, because you see that sometimes. But hopefully you get the gist of what I'm trying to explain there, is that there, for some reason, the buying is coming in at that level. And so you got to be real careful about going short. But when it tried to go short twice there, and you know that there's a lot of buying coming in, just go long right there. And it takes it a minute, and it comes back, and it gets the break-even stops, and then it gives you a second entry long. Really, the second entry long came right here, but that was the first time you got a corrective bar that went lower than a previous bar, and it's really just like a two-legged. So it's really like that old failed second entry short. Let me move these, and you can see, oh, actually it did go low there. I was thinking that bar didn't go lower, but it did. Notice this is a new low. First entry short, pull back, second entry short. So it's not like a failed second entry short. It is a failed second entry short. For whatever reason, I was thinking that bar didn't break lower, that it closed even, but it did. It filled that little gap, another one of those little gaps, and took higher. And so, and it's all. Notice you got this trend line working up through there, and it bounces right off that trend line as well. So that's another reason. Uh, and if you drag that trend line up, look how it fits right here, and that's exactly where prices go. And so you're looking for prices to come back here to this side. Um, but I was looking at this as a range at this point, and notice that you got that's important resistance right there, and you come to that same spot. I don't think you want to take a first entry short, not after that nice move up, but then it turns up, and look at that bearish bar. So I think it's okay to go short there, because now we're playing this like a range, and that's your second entry, and it's a big bearish bar. Easy scalp, and we do shoot through the the trend line that I had on there. But somebody asked me about this. They actually had a second entry long right here, but and it actually ticked higher right there on their chart and turned down, so they went short there. But if you're paying attention to what I just told you a minute ago, that you could see the perceived value here and the buying coming in every time prices come here. Plus, if you move this line up just a little, look what you've got. You've got a double bottom right there. You got 1, 2, 3, and so you don't want to be going short into that, especially with some bars stacked up side by side. And theirs ticked higher and turned down, so they saw that as a long trap and went short right there. But remember what I talked about earlier about when you're looking for traps, where you're looking for them to happen. You're not really looking so much for a short trap or a long trap down here at these. You're more looking for the short trap down here. And guess what? You do get it. It breaks lower and turns higher. And I like going long right there. Notice all those bars. It breaks lower, turns higher. And that's really your second entry long right there. And so you got to make sure, you got to understand what's really going on, and you're not just looking for failed second entries and failed second, and traps or whatever. You're looking for them, but you're looking for them to happen in certain ways. When you get down to strong support like this, you're more or less looking for a short trap, and when you're getting up to the highs like up in here, you're looking for the long trap. So make sure that's clear, because and that's why I'm so hesitant to talk a lot of. There's such a powerful. I'll say this and then we'll move on. But if you didn't do anything but wait for these traps, these failed second entry longs and failed second entry shorts in the right context every day, you can find 3 or 4 or 5 of them almost every single day. And if you just waited on those and took those alone, you could make a living doing this. So they're that important and they're that good, but I think it's just like the second entries. Some people think that every second entry they see they should take, just like right here, there's a second entry short. But notice I got it circled as a long. You got to be careful where you take your second. Just because you see a second entry short, it's got to be in the right context. A great second entry long here, but it's got to be in the right context. There's no reason to go long yet. So hopefully that makes sense. But anyway, nice long right there. Again, no second entry long triggered on mine until right here. But this lady's chart, it actually ticked higher and then turned down and then turned down. And so she perceived that to be a trap as a failed second entry long. And it is a failed second entry long, but it's not going to fool a lot of people going short into all that buying right across there. And you see what happened. It went right into that same area, and that's rejection. That is what you call rejection of prices. It doesn't hang around down there. You don't get a bunch of bars stacking up together, and it just rockets out of there. That's rejection. It comes back and tries it again and rockets on again. And it was all uphill from this point. So nice long. There's a second entry long there, but I think it's too close to here. But then when you get the trap here, I kind of liked it to go long. I made this one green because you are going long into this, but you got to realize what's going on at this point. The down move is over. You're starting into an up move. Notice too that it bounces right off that former trend line, so that gave it more weight. Um, Actually, it's right here. I'm sorry. It's still, notice it bounces. Look, notice how your closes are all still inside that trend line, and it turns up. Um, I did make this one green because it's almost the same thing that she saw down here, but the context is totally different now, um, because you've been turned up how many times? One, two, three, and then you got the higher ones, and you get this. Anytime you get this trap where it breaks below an important, especially to the long side, I'm a lot more apt to buy the highs than I would be to sell the lows because the overall bigger trend is still up right now. Now, if times change and we were in a longer term downtrend, I might be just the opposite. I might say, hey, I'm more apt to sell the lows than I would be to buy the highs. But we see this happen every day, almost prices, or every time there's a big sell off, prices find a certain area and the rally starts back again and it just keeps on going. So this is aggressive for the reason I said, but there's a trap there. You're back inside the main trend line, and you're probably, even if this turned out just to be a short-term trend, you're probably still going to get the new high, and you got room to get out there before that. So that's why I think an aggressive trader is going to take that one. And this is just a breakout pullback long. This one's the one that you should be more apt to take. And now you've failed going down 1, 2, 3 times. So I like that one to the upside. Comes back. And then you get kind of hung in this stuff. By the time your second entry comes, now you're right here at these highs again. You got all this overlap. Wait on the trap. You get a little move down, but you never get that second move down. It just kind of goes higher. So you just kind of got to watch this one. And then you get then you start moving back, and guess where it bounces? You get a second entry long right off the trend line again, and it tries to go down so many times. But notice this double top, first entry, pull back, second entry. It's a second entry long, but this is what I like about it. It's right off that trend line. Notice how it's still closing inside it. Tried to go down once, and then it comes back and tries it again, and it can't go any lower. So when it breaks higher, and I guarantee you a lot of people were piling up short here, and you can see that by how it rockets out of there. It started hitting the stops, and it rockets out. You get a little two-legged correction back. Now you got this trend, shorter term trend channel. That's just a little two-legged correction, and back to the trend line. And so you get a second entry long there, and it's obvious now that this thing is humming along pretty good to the upside. You can tell that everything has changed, and you see that little leg up right there, and then you get a measured leg pretty much there, and this is just like a little correction in here. You're probably going to be more accurate to measure this leg from here, but you could also measure it from here, and you see it's pretty much perfect there. But this would be the one that I would be looking for first. And you see we got there, and it looked like it was going to turn down, and it just shot a little higher, and that's common, especially if the market is strong, which it was at this point. And then we correct all the way back to the trend line again. And, after getting this little overshoot right here and working our way back, I'm not going to go long until we've at least got back to this, or we get another trap of some kind. And notice we get back to here, we try to go up, we pull back, we makes that, and you do have a couple of closes outside of this little channel now. You got a new low, you test it to the tick, and it just reverses, and it takes a lot to reverse a bar like that. So I like going long right there. And you could have actually treated this, actually, not only, you couldn't just, it is a failed second entry short, but I didn't feel that confident in this one because we had what looked like a breakdown here and those couple of legs up. So I wasn't that confident in going long into those highs right there. And it did work, but notice all that congestion there. It was just too big a chance that turns up, ticks higher and turns down. Looking back at it, after I watched it go up, I thought, man, I should have taken that trade, but I didn't. Uh, so I didn't mark it because it is a trap. It is a failed second entry short. But I tell you what, I would have liked better if notice how that's a big bearish bar. If prices would have ticked lower and went out the top, I actually had a buy order there. But when it didn't go out on that bar, and then um, I canceled it. And then when this one ended up as a doji inside, I thought I did the right thing. But in the end, it broke higher and went higher. So I wish I'd have trusted my gut instinct and taken it, because those traps rarely fail. And notice where this trap is. It's on the way down, and this is an uptrend. So that's where we're looking for them to happen. And look at it go. And then this is just another two-legged pullback. Once we got through yesterday's low, you figure the next target is going to be somewhere up here. It just turned out to be yesterday's open, and it corrects. And this is just a two-legged correction. It didn't break higher here on my chart, but it's still one leg, a little correction, a second leg. But what I like about it is that to the tick, it bounces off of that trend line, and it's like a second entry long. You don't know it's going to take off like that. I figure it's going to come back and test the high maybe, or at least test these highs, but it just keeps on going. And this is really a second entry long here. Even though you didn't tick lower, it's like a correction when you get those two matching bars. So, but you're getting so close to the highs, I don't think you want to take that one. And that was the last trade I marked. So if we back out, I hope you can see. And I also failed to talk about this. When I posted the midday chart, I had it posted with it just like this, and my reasoning was, or my thought process is that this could be a two-tiered, because we kept overshooting and we kind of undershot here too. That this could be a two-tiered channel, and this is a midline. But in the end, I don't believe that to be the case. I believe that this is just a channel, and we overshot it. So that's what we're looking at right there. So I meant to talk about that earlier. But once it broke higher here again, I really thought we may get that trap right there. A little failed second entry short that bounced right off the midline, but it didn't. It went on through, and then it kept working lower. And then it's obvious that this was your channel. And notice this overshoot to the low side, and we got just about a mirrored image overshoot on the other side, and now it's correcting. And that generally will tell you if you've got your channel consistently right. And look at this little overshoot here where we got an equal one here, and that was another reason I liked going long there. So generally, if you get an overshoot on one side, you're going to get an equal one on the other, or you might come up equally short. And I think that's why this tricked some people, because they're thinking, hey, we came up this equal amount that we overshot, we came up short. And there was a little break lower here, but it's just not a very good signal bar. If this would have closed on its high, but this one closes fairly nice, but everything was kind of below the EMA. Just reasons that you don't want to take that one. You want to wait and just see. You want to wait for a better trade, and it might have gone on without you. But that's what I try to pound into people's heads, is that you're going to miss some trades that are going to go without you, just like this one here, and there's nothing you can do about it. You can't let that shake you up. You can't let that mess you up, because you did the right thing if the setup wasn't right. And what will happen is somebody will take one like that, and it works this time, but the next 10 times they take it, it'll fail, and then they realize, hey, but it's too late then. So if you did the right thing and it went on without you, you just got to say, hey, that's the way the ball bounces, so to speak. So I hope that makes sense too. So, but pretty good day. Draw these short-term trend lines. You can see I drew all of these, and notice this one coming down. You got the break, and there was actually a second entry long right there too. But look what's happening here, right in the middle. On either side of this thing, and it's just congestion. They're all stacked up, and you get a little failed break lower. You try the first move up, you try to test it again, and then it's like a second entry long there for the most part. So counting off of this side. And that's hard to see, so if you don't see that, don't worry too much about it. That's something that's a little more progressed. So just concentrate on the easier parts of it if you're not to the point where you can see all the little moves within the price action without going to a different chart or whatever. So that's about it today. 30 minutes worth almost on 25 minutes just on the trades. So lots of good trades today. Most all of them were to the upside. There were a couple of shorts here early on when the bias was still pretty much down, and then we went into the range. You could start buying either side. But after this point, notice there's no sales because I'm buying all the way up because the bias is up now. So, and I don't counter trend trade. Sure, there's some trades in there that worked, but they're not worth risking. Just like right here, look at that big move up and it overshot, and there's a short right there. And if you take that short, then you get burned, and next thing you know, you're way up here, and it could have just kept going, and this could have, we could have went to the next tier of this thing. It could have been two tiered. So, and then the more you move down until you get a confirmed trend going down, and so now, and maybe this thing is more like this. Maybe this is a little higher. That probably looks a little more accurate there now. And maybe there's even a midline in that. But now you've got something working down. And you can see there is kind of a midline in there. So that's what you want to start seeing before you start thinking you want something confirmed to the downside before you start selling after a move up like this. So I hope that's clear. But I'm going to wrap it up. See if seemed like there was one other thing. I'm going to pause it just a sec. Okay, I remember what I was going to talk about now. Yesterday I talked about, talking about how the price action really tells you which way to be trading and which way to go, and that even though we may have targets up here, it doesn't mean we're going there, and you can't really predict it until the price action tells you. So really what we're doing is we're not projecting. This is hard to explain, but another trader sent me an email. I'm just going to read it. He actually posted it, but not everybody is a member. It's in the premium section, so if you're not a member, you can't see it. But he actually posted this, and it's just profound because it's exactly what I'm trying to put into words that is so hard, and it's still kind of hard to understand reading it. But I'm going to read this. I'm just going to read this, and then we're going to call it a day. It says, one of the first skills to develop and hone is the ability to trust oneself to follow your system. Without this skill, little trading success is likely to be achieved. And so that basically just talks directly to what I was talking about don't listen to the naysayers, trust yourself, and just keep working at it. So that was the first line. But here's where it gets really interesting. Many, but not all, who predict markets are living in the future hopes, and a large subset luxuriate in excitement, the highs and lows of being right and wrong. So there's the emotional thing again. If you're still real emotional, and you're doing it because of the excitement, you're probably not going to have much success. When it starts to get boring and it just feels like a boring way to make money, that's when you're getting close. So that's another part. This is just really profound information because there's 3 or 4 paragraphs in here just like that, and they all talk exactly about what I'm talking about, except they're worded a little bit more eloquently, probably a little bit differently than I would word it in my Mississippi Southern language, so to speak. But let me read that one again. Many, but not all, who predict markets are living in future hope, and a large subset luxuriate in excitement. In other words, they get excited about the highs and lows of being right and wrong. And that's, if you're feeling that, you're trading for the wrong reasons, and you're probably going to be a loser. You'll have those days of highs, but in the end, you'll have more sorrowing days than you will exciting days. And here's the part I really wanted to point out. Those who respond to markets are living in the now. Having previously considered this very situation and how to best exploit or manage it when it occurs, based on weighing of alternatives over various time frames in the context of other objectives and preferences. So what I'm taking away from what that just said is those who respond to the markets, and that's what we as price action traders do. We respond to the market. We're not necessarily trying to predict the market, although we do have some predictive tools that help us in our ability to respond to it in the now. And so let me read that one more time. Those who respond to the markets are living in the now. And I mean, that's profound, because that's, so it just, and that's what I was trying to get across yesterday by saying that, you'll hear me say, prices are probably going here, but it wouldn't surprise me to see them down here. And the reason I say that is because you don't know until, because prices could actually be trending just like they're going down now. Well, if they continue to go down this trend, they could be all the way back down here at the lows by the time we close in 45 minutes. But we could easily get a trend line break, a retest, and then head up and end up closing way up here somewhere. So you have to follow, but that's what we're doing. We're price action traders. And so we follow the price action, and if you know how to read it, it tells you when the reversals are coming. There's a reversal pattern right here and a retest of it. There's a reversal pattern right in here, and it's not as clear as this one, but that's because it's been in a big uptrend. But notice how far away from the EMA we got. We overshot the channel, and then we got a little bit of a bounce there. We didn't get much bounce there, and next thing you know, we're underneath the EMA, and we're making lower highs and lower lows, and that's a downtrend. So you got to switch gears. And, but when it bounced here, I might have been willing to say that I might have had a target way up here. And it wouldn't have surprised me if it went there. But then again, you get a reversal pattern, and it doesn't surprise me that it's going down. So that's what, when you hear me say things like that, it's not that I'm just guessing where prices are going. I don't know where prices are going, but I know how to follow the price action. And I know how to get to where, basically all I'm going to do is go with prices wherever they're going. And so let me repeat that. I'm not looking to predict where prices are going, although I do that to some degree because I'm waiting on prices to come back to these areas to give me a setup. And notice when they came back here, there's no setup. They just went right through the trend line. But look what happened every other time I was waiting on prices to get there. I got a setup of some kind until right here when it finally went straight through with no bounce at all. That's telling. And you had the trap here, and that's the reason, because you had all these people that know they got to exit. All these longs are throwing in the towel. They realize something's changed, and they got to exit. But you got to understand price action to know what's going on there and why that rocketed down suddenly. The reason it rocketed down is because all the people that have been getting long and the people that got long in here, their stops are under these lows. They know if we make another low that now we're making lower highs and lower lows, so it's time to exit. And so they all exit, and that's what causes these big moves down. And so, but you got to understand that, and you got to understand how prices work and what's going on. Let me see if there's anything else that I wanted to. This final paragraph. Profits will always tend to be elusive as long as your perception of the market is flawed. The market does not know of your roll projections onto it, nor does it care. It just is. So you must change your perception rather than try to force the market into what you want it to be. For you do not have the power to force the market to do anything. It just is. And this stuff is so profound. And if you just read this and you don't understand what we're doing, it probably is just gibberish, just words piled together that sound eloquent that don't mean anything to you. But it's what we do. We are not trying to project other than short term where the market's going. We're just following the price action, waiting on the setups that are probably going to occur at the right places. And if they do, we go with them. If they don't, we sit tight. And so I hope that helps some of you. I hope it's clear to you. So if you're wrong, you nothing you say, scream, holler, if you've been trading any amount of time, you know what I'm talking about. When you start hollering at the screen and saying it's crazy, why are prices doing this, and you're in a trade, it's time to get out. Trust me, it's time to get out. Don't wait on it to because you're no amount of screaming is going to change anything. You're wrong, and the market's never wrong. We're wrong. We read it wrong. We misunderstand what it's doing. But the market itself is never wrong, and you can't argue with it because you know, you don't have the buying power or the selling power to change anything. So, as us as retail traders, all we can do is just get a little piece of each of the moves. And it's amazing if you follow what we do and use the tools like we teach them, you can get a great percentage of the move, but you're probably never going to get it all, and you shouldn't try to get it all because it gets too risky. Just like this move right here. Once it got up into here and you start seeing all these stems, just exit. Yeah, look, it pushed up a little bit higher, but do you want to risk all this to try to get another point or another 3 ticks or whatever? No, just assume that, hey, I got my piece, this move up. I'm not going to hang on for 3 or 4 more ticks or the chance that or gamble on the chance that it might make another leg up because it's already overdone. Look how far away from the EMA. Look, it's overshot the trend channel. Exit and look for another entry. Wait on another entry and look, by exiting, you didn't let it take all your money back. So I hope that's clear. And this thing is really long today. Didn't intend for it to be. But if you go look at yesterday's midday chart, uh, the stuff I was reading is posted there if you want to go read it, if you want to look at that some more. But basically, it's just what we talked about is that you get out of the markets what you put into them. If you're trading for the excitement, you're trading for the wrong reasons. You'll probably lose. You should be trading because you want to make money, and that probably won't even make sense to you at some point. But trust me, that's what I mean. I get that comment more than anything. I heard you say that a million times, but it never made sense until now. And now suddenly that I'm getting it, what you said makes perfect sense. And I wish I could have grasped it earlier because then I would have saved myself a lot of heartache. But and if you don't understand it, it just doesn't make sense, and it doesn't seem important. But once it makes sense, it does. So I get it. It's difficult. So if you hear me say something a lot, I promise you it's probably important. And lately I've been trying to say, listen to what I'm saying, and if you don't get it, just keep listening and because it's important. So I'm learning, as I do this, I get better at it too, and as I teach, I learn. I get, hopefully I'm getting better at that too. I learn some of the things that are more important than others. And but sometimes I forget that we have people that are just starting for the first day, and they're trying to figure all this out just from the videos, and that's going to be hard to do. You're going to have to watch a lot of videos to get this stuff. But long chart lesson today. I'm going to wrap it up. I didn't intend to get off on a long tangent again, but I think it's all important stuff. So I'm going to call it a day. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.